Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today is Friday. It is the 17th of September. Friday is finally here, and I don't know where this month has gone. Now, the Dow futures are down about 81 points, slightly beyond random. Anything below 70, 75 is real. So it's down 83, but if you look at the E-mini and if you look at the NASDAQ, it looks like we're still very, very choppy, and I'll show you that, and I'll show you how I look at it. It's real simple. We look at the number of stocks making 90-day highs and 90-day lows. So these are 3-month highs and 3-month lows, and as you can see here, there's only 87 stocks making 3-month highs and 68 stocks making 90-day lows. Now think about it. There's thousands of stocks in the market, right? There's 500 S&P stocks. I mean, there's like 6,000 stocks? That means market breadth is very, very narrow and very, very choppy. And when you see this type of market action, it's just telling us that there's still a lot of choppiness left to the market. Now, looking at the sectors, though, look, technology's back to the first spot, and look at consumer discretionary. It's coming up still. Remember a month ago, I showed you this? Let's go back 1 month. Look at consumer discretionary. Look at the distance between tech and consumer discretionary. Well, that distance is now narrowing. And if we can just go a little bit higher, meaning if not technology, but consumer discretionary, let me just kind of show you where it's at right now. And I've been focused on it because of this ascending triangle. And it kind of soaked down a little bit, it pulled back a little bit. But I think we're going to break above this level. And once we do, I think we're going to go higher. So I think this pullback is actually a good little clean out, something that we need for the market to pull back higher. And also, as I showed you yesterday, momentum levels are declining. The fact that consumer discretionary is getting closer to tech means the market is getting closer to being fragmented. Now, we had a lot of Fed data this week. We had jobless claim, we had retail sales, which was actually better than expected. And today we have consumer sentiment. Now, my beef is that consumer sentiment really reflect strongly on the economy, because 2/3 of the economy is consumer sentiment or retail sales. So I think this report should be here, not here. But again, based on the retail sales report being really good yesterday, I think consumer sentiment is going to be positive as well. And that's going to be bearish for the bond market. Why? A lot of people are asking me, what is my fascination with the bond market? Well, you see, the bond market is what drives the stock market. And the fact that we've been choppy like this in the bond market explains why we've been doing this in the overall stock market. Look at that. Hard to trade that market. That's the small caps. And let me show you the mid caps. It's very similar. That's really what the market's been looking at. Choppiness. So that's because the bond markets haven't been doing anything. Remember, the stock market gets its volatility from the bond market. So the fact that Fed data is really positive, and the fact that retail sales is rocking and rolling, is going to give Fed less excuses to keep buying bonds, right? The only thing they had last time was COVID. Well, COVID seems to be starting. Like we're at a point where things are starting to cool off. Summer's behind us. It's I think we're okay till the winter at least. And I think the bond market's going to start cooling off, and the Fed is going to start making an announcement that they're going to be raising rates or pulling the rug under the bond buying program sooner than later, which would cause the bonds to go down, interest rates to go up. So I'm watching for the bond market to break the 200-day line. And I think we're getting very close, and I'm expecting more downside from the bond market at these current levels. So again, that's my prognosis, and I'm sticking to it. Now, the Dow Jones is still trading below the 50-day moving average. Now, remember, the Dow doesn't have a lot of consumer discretionary in tech. It has a lot more industrial stocks, a lot more blue chip stocks. But again, narrowing of momentum is happening right now. Now, I want to show you guys something interesting. I want to give you guys a preview of the top stocks right now and the weakest stocks, so you guys have a good idea of what's rocking and rolling. Moderna, still number one. IT, Fortinet. Does this list look familiar to you? It hasn't really changed much, right? Look at this. Bath and Body, Quanta, Charles River Laboratories, ResMed, Monolithic Power, Equifax, MSCI. These are all the stocks that have been on this list for quite some time. And I see that Albemarle and Danaher are starting to come back. And I like these stocks, basic materials. But bottom line is you could see that it's not really tech heavy. It's more medical and blue chip stocks. So medical stocks, a lot of medical stocks, some tech, but not a lot of tech. The bottom line is it's a mixed market, which is good. But the same stocks that are right now rocking and rolling were the same stocks rocking and rolling a month and 2 months ago. So nothing has changed. Fortinet was my top stock. Let's go back 1 month. Fortinet. You see that? Moderna, Fortinet, Gardner. This is August 16th. Albemarle, Dexcom, Waters, Charles River Laboratories, NVIDIA, ResMed. You see that? That's a month ago, August 16th. That's why I like to look at this. Now, weakest stocks. Win. These are the two weakest stocks, Las Vegas Sands and Win. So look for downside opportunities every time we rally. Gap is not doing well. Remember, Gap was a big darling a year ago. Airline stocks, cruise ship stocks. Travel is still Carnival, Norwegian, U.S. Airlines, not doing so well. Travel-related stocks are still not doing well. That's the S&P. Let's now do the same thing with the Nasdaq to give you guys a good idea of where we stand right now and what's rocking and rolling. Again, Moderna, NVIDIA, Dexcom. Remember, the Nasdaq 100 still has the same 100 stocks, or about 90% of the stocks the S&P has, but there's only 100 of them, and then there's others. Adobe, I really like Adobe. Intuit's looking good. Costco's rocking and rolling. Same stocks, but as you can see here, this is the Nasdaq 100. Nasdaq 100, right? Facebook, Cadence, Alphabet, Intuitive, Costco. Lulu's making a comeback. What do I always tell you guys? Lulu and what's the other one? Crocs, top clothing companies. So again, that's the top NASDAQ stocks, and here are the weakest NASDAQ stocks. Zoom, the stay-at-home stock. Isn't it weird? You've got cruise ships and the S&P being the weakest, and here you have Zoom, the stay-at-home darling of last year. Trip.com, Dollar Tree. So it looks like a lot of the stocks, Kraft, remember Kraft during the pandemic? The first part, Expedia. So travel stocks and the stocks that have been the stay-at-home darlings like Zoom that have been capitalization. The reason it's doing bad is not because the stock is doing bad, is because the expectations have gotten so bad. I mean, so big on the stock, it just can't keep up with it. Now, I know it's Friday. I know you guys have big plans for the weekend. Keep your eye on the Dow Jones. It's still below the 50-day line. And I think if consumer discretionary can come up, and if today's consumer confidence data is positive, we'll see weakness in the bond market, and we'll see some upside in the Dow and the respective indices, which are still trading above the 50-day moving average, at least on the market capitalization level. If you look at the equal weighted SPY, this is SPY without stripping away all the market capitalization, we're sitting at the 50-day moving average. So be very, very cautious, be very careful, and don't overstay your welcome right now in stocks. On that note, I got a juicy one for you. Garmin, GRMN, consumer discretionary. This is a going out stock. I think going out stocks are going to start making a comeback because people need their directions. Garmin directions map, you program the map in there. That's what the company does, as you could see here. Multinational technology company, GPS navigation, 71%. So it looks like if consumer discretionary keeps going up, this is a consumer discretionary stock, I think we're going to see a pop-up, especially with consumer discretionary. Look at consumer discretionary, it's going higher. And if we break above this level, we're going to see some love out of consumer discretionary. And Garmin is one of my favorite stocks. So it's pulling back to the 50-day line, made a swing high. RSI is way, way down. I think the stock is going to bounce back. If it breaks the 50-day moving average, you get out of it. Now, before I let you go, I know it's Friday. I know you guys have a lot of stuff going on this weekend, but I've got something even more important for you. Wall Street has been choppy lately, right? I mean, talk about choppy. I mean, look at this thing. I mean, we're talking choppy, right? Choppy. I mean, flatter and choppier than a pancake. It's getting harder and harder to get this market right for most traders, right? Because think about it. It's choppy. There's no volatility. We thrive on volatility. There's so much data pulling investors in different directions. COVID cases, economy running hot, economy slowing down, inflation, bond tapering, rising interest rates, supply chain, bottlenecks. I mean, It's coming from us from everywhere, right? It's a daunting task just to have a proper game plan when the market's open these days, right? I mean, look at everything I have to go through every day. But there's a way to start each day trading with a specific predictions on how stocks are going to move. And it all occurs before the opening bell. Before the opening bell. It's called early bird cash. And the world's number one, that's right, world's number one pre-market trader is sharing it with investors who are ready to step up their game. Man, I'm excited. Are you ready to find out how to incorporate these patterns into your trading toolbox? I hope so. Click the link below. Learn all about it right now. Folks, this is really good stuff, and I want you to get in on it. You got to incorporate this in your toolbox because Roger Scott says so. Follow the link below. Do it now. And make sure to like this video. Subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being one step ahead, by being the first to be notified when I post my next video. Don't you want these levels, the TLT, the Garmin, all this stuff? Of course you do. And follow the link below. The number one pre-market trader has something for you that happens during market hours, but you gotta click the link below to get in on it now. Bye.